Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Monday, April 27th, 2026. Today's signal of the day is AMC, a small cap equity trading around $1.64. But before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and commentary, not investment advice. And I'm not your financial advisor, so please do your own research before putting money anywhere. Now, let me set the table for the week before we get into the alpha, because this is one of the most loaded macro weeks we've seen all year. And you cannot trade these signals without understanding what's pressing on the market from above. Wednesday is the live fire session. At 5:30 Pacific, the Bureau of Economic Analysis releases the first read on Q1 GDP. Consensus is looking for 2.1% annualized. A print below 1.8 paired with an employment cost index above 1.1% quarter over quarter is a textbook definition of a stagflation signal. That combination would reprice the short end of the yield curve before the Fed even opens its mouth. 6.5 hours later at 11 Pacific, the FOMC announces. The market is pricing a hold at 4.25 to 4.5, and that's almost certainly correct. The market is not trading the decision, it's trading the tone. Right now, June rate cut probability is hovering near 38%. A dovish Powell, one who signals mounting growth concern, can push that to 55% and rip the short end higher. A hawkish Powell, one who emphasizes sticky inflation, drops it to 22. That's a 33-point swing. In the cut odds is the actual options trade Wednesday afternoon, not the rate decision, the tone. On top of that, this week is Mag 7 earnings. Microsoft and Meta print Wednesday after the close. Alphabet announces later in the week. These three names alone represent a meaningful chunk of S&P 500 market cap, and the market's tolerance for Meta's $115 to $135 billion AI capex guide depends entirely on whether ad revenue growth is accelerating fast enough to fund it. Consensus expects ad growth above 15% year over year. Anything below that is a negative catalyst, not just for Meta, but for the entire digital advertising complex. Now, right now, the put-call skew on the S&P is elevated. Institutional money is paying for downside protection. The VIX is near 19 with historical patterns suggesting a 2-point intra-week expansion is well within base rate during simultaneous GDP and FOMC weeks. Translation, the market is hedged. Hedged markets often move violently in either direction once the catalyst hits because positioning is one-sided. Now that's your week, but let's talk about what BuzzPulse surfaced into that backdrop, because the names on the list are exactly the kind of higher beta short squeeze eligible setups that move 2 to 3 times faster than the index when the macro pivots. Signal of the day is AMC. Wow, AMC just passed 10 independent quality gates in the same 24-hour window. That's not noise, that's convergence. Buzz Surge Z-score hit 3.9 this morning. Momentum is confirmed across multiple time frames. Sentiment is constructive at plus 0.33. And here's where it gets interesting. We're seeing buzz price divergence. Social attention is spiking while the stock is trading sideways. Historically, that pattern precedes either a breakout or a breakdown. It rarely stays sideways. Short interest sits at 15% of the float, so any upside momentum has built-in fuel from potential covering. Options intelligence says implied volatility rate is at 1%. That means options are historically cheap right now. If you're playing this directionally, premium is as low as it gets. We're also seeing options flow that confirms the directional bias. Aggregate call activity is elevated relative to recent baseline. AMC is a Russell 2000 component, which means it's getting institutional eyeballs even if the meme stock crowd has moved on. What to watch? If buzz continues to build and price breaks above $1.70, the divergence resolves bullish and you'll see fast money pile in. If buzz fades and price rolls over, the divergence was a head fake and the signal dies. This one has teeth, but it needs follow through in the next 48 hours. The tape is between now and Wednesday's closed, and that's the test. If AMC can hold 164 into FOMC and break out on a dovish Powell, that's the squeeze trigger. If it sags into Wednesday, the signal needs to be reassessed. A note on what makes AMC the signal of the day rather than just another top 5 name. Well, today, 10 independent confirmation layers fired simultaneously. Buzz surge, multi-time frame momentum, constructive sentiment, buzz price divergence, Russell Index membership, cheap IV rank, confirming options flow, short squeeze potential, liquidity, and institutional eyeballs. The 7-gate quality filter is designed to exclude obvious names. AMC is not obvious here. The meme stock crowd left this name for dead months ago. That's exactly when BuzzPulse is built to find the asymmetric setup. Nobody is talking about AMC, but the data is, and that's the trade. Second signal, RUM, RUM, mid-cap equity at $6.52. Greed score, 7.421. Z-score, 3.5. Momentum is confirmed. Sentiment is plus 0.34, which is constructive but not euphoric. Short interest is 26%. That's massive. Over a quarter of the float is sold short. IV rank sits at 0%, so options are dirt cheap here too. The catalyst driving this is vague. Social chatter picked up without a clear fundamental hook. But that's often how the best setups start. Smart money sifts something out before the headline drops. Retail follows after. RUM is a Russell 2000 name, so liquidity is decent and institutional participation is real. If this breaks higher on volume, short covering can accelerate the move fast. The math on a 26% short interest is brutal for the shorts when the squeeze begins. They cannot exit all at once. Watch for a move above $7. That's where the pain trade starts. That's when the shorts start to have to cover involuntarily. And remember the macro context. RUM, like every name on this list, is a higher beta name. If Powell is dovish Wednesday, this rips. If Powell's hawkish, this gets pinned. Position sizing matters more than entry price here. Third signal, Mara Holdings, mid-cap Bitcoin miner at $11.64. Greed score 0.412. Z-score 3.1. Momentum confirmed. Sentiment is plus 0.14. So this is not a hype-driven rally yet. That is exactly the bullish read here. Hype-driven rallies in miners usually mark tops. Quiet accumulation usually marks the bottom of a base. Short interest is 35%, the highest on today's list. Over a third of the float is short. IV rank is 0%, so options are cheap. Mara is levered to Bitcoin, so let me give you the Bitcoin context because this is the catalyst behind the catalyst. And as I'm recording, Bitcoin is trading near $78,000. Sentiment on the Bitcoin topic is running 78% positive. Social dominance just hit a 1-year high. Two narratives are pulling the price up right now. First, the peace deal speculation around Iran is risk on for digital assets. Bitcoin tends to absorb geopolitical de-escalation flows because the people who bought it as a hedge against chaos do not always sell it on the same day that the chaos resolves. Second, Bitcoin 2026 conference in Las Vegas is just ahead. That conference historically pulls capitals into miners on anticipation alone because every speaker on the main stage either runs a mining operation or invests in one. The narrative for the next 2 weeks is going to be miner friendly, almost regardless of price action. Now layer that on top of Mara's setup: cheap options, massive short interest, quiet sentiment, a Bitcoin tailwind, a miner friendly narrative window, and a 35% short interest reading. That means that any upside move forces covering. If Bitcoin pushes through 80,000 this week, Mara moves 2 to 3 times as fast on the upside. That is the leverage math of a miner. They have fixed costs and variable revenue tied to Bitcoin's price. When Bitcoin rises, miner margins expand non-linearly. The downside is the same math in reverse. If Bitcoin rolls over here, Mara gets hit twice as hard as the asset is leveraged to. So this is a higher conviction setup, but it's not a low risk setup. It's asymmetric, but it requires Bitcoin to cooperate. Watch for a break above $12 on volume. That's a line where the squeeze math starts to work in your favor. Now, quick crypto context for the broader portfolio. Ethereum is sitting near $2,318 with 83% positive sentiment, up almost 16% over the last 30 days. Engagements on the Ethereum topic are up 53% week over week, mentions up 33. There's institutional adoption energy underneath the surface that's not reflected in the price yet. I'm not putting Ethereum on today's signal list because BuzzPulse did not flag it through the 7-gate quality filter today. But for context, the entire crypto complex is leaning bullish into this peace deal narrative. That makes Mara's setup more credible, not less. When the broader category is healthy and the specific name has a quiet base, that's where the alpha tends to live. Now, let me bring this back together for you. 3 names today: AMC at 164 with cheap options, buzz price divergence, and 10 layers of convergence. RUM at 652 with 26% short interest and 0 IV rate. Mara at 1164 with 35% short interest, a Bitcoin tailwind, and a minor narrative window. All 3 are higher beta than the index. All 3 benefit from cheap options pricing. All 3 are eligible for short squeeze dynamics. And all 3 sit in front of a binary macro week. The single biggest variable for all 3 of these names this week is Powell on Wednesday afternoon. A dovish tone pushes June cut probability higher and the short end rallies. That's fuel for small cap and crypto levered names. Higher beta names lead the rally in that scenario. A hawkish tone keeps the cuts on hold. Small caps stay pinned and miners give back recent gain. The range of outcomes between a dovish Powell and a hawkish Powell is the difference between a green week and a red week for everything BuzzPulse surfaced today. Plan accordingly, size accordingly, and do not fight the Fed if Wednesday's tone surprises hawkish. Now, a word on the Mag 7 earnings as a cross current. If Microsoft and Meta both beat and guide higher Wednesday after the close, that pulls capital out of the small cap and crypto levered complex and back into mega cap tech. This is counter-cyclical risk for the names on today's list. If they miss or guide lower, capital rotates the other direction. Watch the after hours tape Wednesday closely. The first hour of trading Thursday is where today's signals either get confirmation or get faded. Now, one more thing on the proof layer. Last week's signals are still working. AMC continues to build a base in this same 160 range, which is why it earned the signal of the day designation again today. The accumulation pattern under the surface is exactly what you want to see before a breakout. Mara was a winner last week and remains in the proof layer with the 8% mechanical stop loss in place. The model portfolio approach is doing what it's designed to do. Track every signal of the day with $1,000 at the locked entry price, hold until stop, and report results publicly. No cherry picking, no revisions after the fact. The dashboard is live at buzzpulse.h9ksystems.com/dashboard. Anybody can verify what every signal did and what every signal is doing right now. Remember, BuzzPulse tells you what the market's talking about and whether that attention is unusual. It doesn't tell you whether to buy or sell. That's your call. The data points the flashlight, and you decide whether to walk in the room. But until then, I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.